Or we have reached that stage of the cycle where every YouTuber will start almost every video with Bitcoin has just hit a new all-time high. Welcome to the hype phase of cryptocurrency. What I'm going to talk to you guys about in today's video is actually a macro view of Bitcoin, something a little bit different. We don't often talk about it on this channel as we're usually looking for day trades. But the reason that I want to zoom out on this video is because I want to show you where we are in the cycle overall, because if you understand a macro view, then it will help you with your day trade. In particular, knowing when not to day trade and when to potentially look at other opportunities instead. So in addition to taking a macro view of Bitcoin on today's video, I'm also going to show you how I personally search for those other opportunities and share with you 2 trade opportunities that I'm watching right now that may give us a better potential return than Bitcoin, where Bitcoin is currently sitting right now. So if that is the kind of thing that you're into, be sure to smash that like button nice and early as we get into this video. And if you are new here, welcome. Also, be sure to hit that subscribe button. Let's go. So what I'm sharing with you right now is a chart that we have been monitoring in the TTC community for quite a few months now. And I'm on the daily time frame for Bitcoin. And this starts from the very bottom of the bear market. And this chart that you're looking at now, I'm going to explain it in detail. But this is what we have been watching on the higher time frames to understand where we are before we make any day trading decisions. And this chart here has really helped us in the cycle so far because it's shown us that it has not really been worth shorting for quite some time. Even as a day trader, if there are short positions that will play out, they're most likely not going to be as profitable as your long positions, simply because of the macro cycle. So before I get to this, I just want to go over this formation, which is the formation in which we trade by. So if you've never watched me on this channel, if this is your first time hearing about this, the way that this particular pattern works starts from the weekend, and this is a day trading pattern. So it will start on the lower time frames, and the lower time frames will keep price trapped on the weekend usually. And then at the start of the week, there will be a false move. And that false move is designed to stop out weekend traders, but also trap any pending orders in the wrong direction before the market moves the other way. And so that is presented in a number of ways, but one way it can present is in a W or an M formation at the start of the week on a small time frame. So we're talking a 15-minute or lower. In this example here, the false move is a W formation, but this can also look the opposite way where the false move starts with an M formation. But whichever one it is, following the false move, we will then have 3 levels of rises. So if it's a W formation, we will expect 3 levels of rises, usually over 3 days. So 3 rises or 3 days. And then we expect a midweek reversal, which will lead to 3 drops and eventually take us back into the weekend trap. So this is how a typical week will play out. However, trends can feed up into higher time frames, and that's when we can end up having a model like this on a macro time frame, which would mean that whatever the trend is on a macro level, so in this case, we're in a clear bull market, the trend is up, that will mean that your rises are going to be a hell of a lot more profitable than any drops. And so when the macro trend is very, very clear, you're better off just trading the macro trend. So looking for your 3-level rises. When price pulls back, don't short them. Just let that happen because they're not likely to be huge trades. Every now and then they will be, but in a bull market, they're just not going to be as big as your rises. So you're better off concentrating on getting those rises. When you have those deeper sell-offs, get your long position and ride the long position for the next level. So if you keep this image in mind, when I bring you back to my chart now, you can see what's happening. Now, these levels are actually playing out on the weekly time frame, but I'm on the daily chart right now because I want to show you that within a higher time frame rise or drop, the one time frame lower will have 3 rises or drops. So let me explain that a little bit further. This down here is the W formation that formed at around the 15,600 kind of region that ended up being the bottom of the bear market. All of this counted as the weekly rise level 1, which I'll show you that on the weekly time frame in a second. But being the weekly time frame rise 1, that would mean that there would be 3 rises on the daily, and you can see those circled here. I'll zoom in on that so you can see. So look at this rise. This is what started the bull market. Then here on lower time frames, you would see a 3-level drop, but because we are now forming a new macro trend, see how the drops are just not worth the trade opportunity in comparison to the longs because of the macro cycle. So this would have counted as a 3-level drop. It's not that clear on the daily time frame. You have to drop down for the short positions, and it would have been more clearer there. But moving on, you can then see that we have here a new rise, and this here, so 1, 2, 3 is the 3 rises on the daily time frame that would equal the level 2 rise on the weekly time frame. Then again, we had our drop. And both of these drops at this point of time have been around the 20% mark, I believe. So we actually haven't had the deep sort of retracements that we usually see in a bull market where they're between 30 to 40%. We've really only hit around pretty much 21% both times. It's going to be interesting to see if that is a new pattern. I think it's too early to tell. This could be the new norm after ETFs have come in. You know, time will tell. Once we have a really scary kind of pullback, then we'll know. But if all we ever get is 20%, be prepared to get in on 20%. And the days of getting our 30 to 40% pullback might be over for all we know. We can't tell at this point. We are literally in a new market and we have to take it day by day. A lot of my friends that are returning to crypto now are asking me, where do you think Bitcoin's going? Are we going to get a deep pullback? And my answer is, we are just watching what is happening in the moment. Like no one can know, no one can predict, no one can tell you we're definitely going to get 40% pullbacks because we got those in the last cycle. We don't know this time. Everybody is watching the market as if it's their first time watching the market. So we can only trade what we see on the charts and just take it day by day. But moving on from that, you can now see that in this rise that we're in right now, so far, the way that I'm counting this is that I can definitely see the 2 rises that form the weekly time frame rise 3. And what's happening right now may be putting us into the 3rd rise. I don't really have any vectors to say that it's over, but I think we're in the process of it. And what I've done here on my chart is use the fib extension tool to try and mark out some targets because now we're in price discovery. And initially I was waiting to see what would happen at the 127. And this really does show on the daily time frame how accurate that is because we did have a number of wicks here that attempted that 127. Obviously there were shorts there and that's why we kind of held that level for a while. But on the daily time frame, we remained above the 10 EMA, which is ridiculously bullish. So there really wasn't a reason to short, but it was definitely a reason to look out for a potential trend change. The trend change didn't come and we're moving up. So the next target from here is going to be around the 161.8, which is at about $78,000. Now I'm going to bring in some liquidation data to see if that gives us any confluence. But this is pretty much how I'm currently seeing the macro time frame model playing out. So what I've just showed you here would equal this part here, right? And then once this final rise is played out, we may see our correction, but it doesn't mean it's going to be a huge drop again. These 3 levels here may just take us back to the bottom of our 3rd rise. Like it might not be a deep retracement. So it doesn't mean it goes all the way up and then all the way back to where it started. These drops may even just be consolidation that goes sideways. We have to wait and see on that one. But now let me show you on the weekly exactly how that shows as 3-level rises. So this here, it gets harder the higher the time frame. So this is the W3 here that it's harder to see on a higher time frame, but this is the W. This is the rise. This is the first 20% retracement. So that's rise level 1 retracement. This is rise level 2. Actually, this is not an area of interest anymore. We never came back there. This is the rise level 2 into retracement. And we are currently in the weekly time frame rise level 3. Now, when you actually look at this on a channel, going back from the last bull market, you can see here that also takes us to around the 78, 79K region. If we do get up to 78, 79K, that is going to be the 3rd touch to the top of this weekly time frame channel as well. So now that we know all of that, what I actually want to do is take you to the 4-hour time frame where I believe when the time is right, the 4-hour time frame may show us the correction potentially coming up. And so what we have on the 4-hour time frame is a little bit of a rising bearish wedge situation going on. And we can see within that, we've got our touches here. So 1, 2, 3, 4. We may get another one, a fifth one. Again, that might end up around the 78 kind of K region. Don't bank on that number because I haven't even added the liquidity myself. I'm not cheating. I will literally see it for the first time with you guys in a moment. But if something like that happens, that might be where we end up getting a little bit of a deeper retrace. It could end up only being another 20%, guys. I'm not talking big dump, final chance. I don't know. We don't know. Any drop that is, anywhere from 20 to 40%, that's a buy zone for me. So I would not wait for the 30 to 40 because, like I said, may not come this cycle. But from 20 down to 40, I'm buying in on anything else that I'm not fully positioned on. The other thing too with this rising bearish wedge is that we still currently have declining volume in it. So yeah, look, we don't have enough touches. So I'm not saying down from here. We may go up before we go down, but this is the pattern that I'm kind of watching for that may give us a heads up. When I zoom out on this on the 4-hour time frame, you can also see how, again, using those 3 levels that I told you about, this is one of the reversal patterns here, which is not a W formation. It's a trapping volume or a half Batman formation instead. It's just another one of the reversals. You have to learn the entire method in full to understand all of the reversals that tell us price is about to change direction. But following that, we had our rise 1, rise 2, rise 3, and at the top of rise 3 is a rising bearish wedge. So that is definitely a heads up on a potential short signal coming. But again, I'm not saying we're going down from 73. There could be more upside before downside. And whilst the trend is your friend, again, I'm on the 4-hour time frame and price is respecting the 10 and 20 EMA still. That is still ridiculously bullish. So until price drops below at least those and then retest them, ideally the 50 EMA, but at least those two for a beginning, we shouldn't expect trend reversals just yet. So ride the wave while the wave is there, but just be prepared in advance that, something may change, over the next few weeks. So let's add our liquidity now so that we can get an idea of what is available above price. If the market maker does want to continue sending price up, then is there liquidity there that they can come and take? And yeah, look, we can definitely see that. We've got a big cluster here that takes us up to 75,000. That could definitely come and do it. And then we have this here again. It's at the 78, 79K region. So, first things first, we've got to get through 75. So look for potential rejections that may end up giving us that touch here, something like that. It kind of feels a little bit too obvious to me though. The round numbers, 70, 75, 80, 85, they usually don't feel like price stops there. It usually stops unexpected. So 78, 79, when people would be expecting 80, makes a little bit more sense to me. But again, I'm trading what I see. And if we get a harsh rejection at 75, I will know that this liquidity has been taken and that's all they want for now. But if we break right through it, then I'm looking at this 78, 79K region next. And again, whether or not I short it, it really depends on how price action looks at the time. But I would definitely look for price to do a nice retracement to look for a buy zone. And if we do get that rejection at any of those 2 levels and start to come down, then we've got a big cluster of liquidity here that is at around 65K. And let's just say we do go up to that 79K region and we come back to, what is this, around, 64, 65. That's going to be an 18% retracement. So that would definitely have my interest if we do start to get some sort of a reversal over the rest of March. So that's my macro view. Now, if Bitcoin does not pull back until it gets up into those levels, do I want to long into this zone on leverage? I don't really, because let's go and have a look at the lower time frames now, and let's just have a look at what's been happening this week. So again, using the model that I showed you, you can now see it on a lower time frame. This was the weekend trap where not all that much happened. And this was the false move that took us to the downside first. When the market opened, we didn't get a W in this case. We got one of the other reversal patterns. And at the moment, we are what should be in our 3-day swing to the upside. So we can see that this is rise 1. This was our retracement. We're currently in rise 2. Maybe rise 2 will take us up to take out this 75K liquidity. That would be ideal. Then come back for a retest, and then maybe it will go up for some of the higher liquidity. I don't know if all that will happen this week, to be honest with you. But don't look at numbers here. Look at the pattern, right? So pattern wise, this is sort of what I'm hoping will play out and where I believe that we are in the current cycle. But when I said to you earlier, at these levels, you don't really want to be day trading right now. This is exactly what I mean. Have a look at the price action yesterday before price actually broke out to the upside today. Look at this stop hunt that we had here to the upside that broke the high of the day and then just closed right back down. So that stop hunt right there would have stopped out anyone who opened shorts in this consolidation, believing we couldn't break resistance. And so those traders got wrecked. And in addition to that, any breakout traders who had pending long positions just above resistance, they got triggered into a long on that stop hunt. And then if they're high leverage traders, price came immediately back down. And this stop hunt right here did the opposite. So this would have stopped out any of those traders that got triggered into a long position. So this was a double-sided stop hunt that took out both longs and shorts who had tried to trade this consolidation. And it's a very tricky price action. It's horrible. What this is typical price action the market maker will do when they basically need to build their own positions. But have a look how this stop hunt just came right down to the high of the week. That is the highest point the price went last week. This is always a very, very key level that you have to know. And then from there, it's held the high of the week and we've continued up since there. So, minus the stop hunts, the model is playing out, but it's difficult to trade because where do you put your stop loss on a stop hunt like that? First of all, you wait for the stop hunt to happen so you can get in after it on any of these candles here that closed back above and held the high of the week. So let's just say you went in here. Your stop loss would have to be all the way below that wick because that's where the last trap traders were. So they shouldn't return to that if the damage was already done. But in order for you to be clear of that damage, you have to have your stop loss below that. And then your target is where it can only be to the last high, which is just here. So that's only a 0.89 to 1 risk reward. It's not a good trade. Could you set it as a fib level target instead because now we're in price discovery? Yeah, you could have done that. But where would your target then be? It would be to the 100 initially, which is still a 1.3 to 1 trade. So this is what I mean by Bitcoin may not be your best opportunity to day trade right now if opening new trades. If you're already in a trade, then you're laughing. You got nothing to worry about. But if opening new trades, it may be very, very difficult. And I did do a tweet earlier this week saying, I don't think now's the time to leverage trade. But I'll tell you, when this happens and Bitcoin becomes the trade that's not worth it for me, I don't care because I own Bitcoin spot. So every day we're waking up richer, so who cares? But it does tell me shift your focus because opportunity will be elsewhere. And let me show you how I find that opportunity. Simply by going to CoinMarketCap. On here, I go to the 7-day here and I click this to bring up the biggest losers of the last 7 days. Why do I want that? Because I want something that has retraced as much as possible because we're in a bull market. So I want to ride the trends to the upside, but I want to get in at the best price possible. So what has come down more than anything else that may have bottomed out and is about to turn over and start to become bullish again, which is going to be the better trade because we're in a bull market. So I'm looking for the biggest losers of the last 7 days. And then on the 1 hour column, if I can see them either start to turn green or just be at like a 1 or 2% like these two right here are, then that's what gets my interest. So looking at this, Bonk and SHIB look like things that I should be charting. So this is how I can quickly find altcoins without, having to chart 20 coins a day. So let's have a look at Bonk, because Bonk was one I actually did an update on in my Discord over the last 2 days as something worth watching. Actually, this is 𝗟𝗲𝗍𝗃. This was another update that we did. And so 𝗟𝗲𝗍𝗃 has broken out, retested, and taken its move to the upside. We won't really worry about that one. Let's have a look at Bonk instead. Now, guys, if you are wanting these sort of trade setups earlier, consider joining us over at TTC. The link is in the description of this video. We do have memberships if you just want to trade. There is a membership called First Class. If you want to learn to trade and invest, then there is also a membership for trading and investing. But you can see here that this was a chart update that I did on Bonk when it was in this triangle a bit of a trade idea, and I'll show you the target in a second. And then a follow-up from that today, it has made its way to the top of that triangle. So we're now pretty much just waiting for a higher low. So if I show you that, what's happening right here, this was that touch that we were waiting for. We're now waiting to see if we get the higher low. Now, for me personally, when I'm looking for a higher low within a triangle pattern, know that that's an aggressive entry. So it may play out, it may not. But what I'm looking for is on this rise here that has potentially created a W. So at this point in time, I'm anticipating that this is going to turn out to be a W that might look like that. So here's how I evaluate it. Whatever is in on this side of the W, I'm looking for a vector there where I want to see price not really close below. So I really only have this one, and it's where price is right now. And this is on the 1 hour time frame. So ideally, I don't really want price to come back too much lower than this if I believe I'm going to get my higher low in order to take the aggressive entry. The second chance, if it does come down further than that, because I don't have any other vectors down here, the only other chance would be this candle here that created the initial low of the day. If we stay clear of that, then the W is going to look a little bit more like this. Any lower than that, then I would wait. It's too much of a risk. It also depends on the speed, so how fast it comes down into that zone. But if it kind of trickles down, like this, trickled up, that's a little bit better. So this is pretty much what I would be looking for on Bonk in order to get into a long position with an aggressive entry. If you don't want to be an aggressive trader, which is completely fine and actually smart, so more power to you if you're a conservative trader. But what you would do as a conservative trader is you would let that whole W play out within that pattern. You would let it break out. Then you would hope that it comes back for a retest after the breakout, create a higher low, and that higher low there would be your entry instead. So how that would look on the model that we trade is that this right here would become your level 1 rise. So you wouldn't be getting in on level 1 rise as a conservative trader. You would be waiting for the retracement or the consolidation after level 1 rise, and you would be getting in right here before level 2 rise. And then there should be another rise after that. So still going to be a good trade, and very often the level 2 rise entry is actually a much better risk to reward because you can usually have a tighter stop loss. So yeah, don't ever think that conservative means you're not going to make as much money. It's an absolute myth. But I'll tell you why this is the better opportunity and worth paying attention to instead of watching Bitcoin at an all-time high where it's got these crazy wicks and they just keep stopping you out. When we zoom out on Bonk, there's a couple of potential targets. Now, we've been in Bonk for a while, so this is actually our average spot entry, so just ignore that orange line. But this is the trade here set up that we're looking for next as a short-term trade. So we've had this rise through here and we've had this retracement. So when we draw the fib extension tool on it, first of all, the first target is always going to be your previous high, which is Bonk's high of the week. I'm not going to read all those numbers out, but I'm sure you can see them on the screen. So somewhere around there would be your initial target. Now, if it could break through that, then the fib extension 100% area is going to be your next target. So let's just put this as an imaginary trade setup, and let's just say we do get that entry somewhere in this box that I marked out. Your stop loss would need to go below the wick of this red candle here that created the initial low of the day. So your stop loss is about there. If we take this up to the first target, we've got a 9.4 to 1 risk to reward on this trade. Now that immediately should feel like a much better trade than Bitcoin at 73.5K, where it may reject initially at 75K. So this is why when all eyes are on one thing, you should be looking for something else, because yeah, it's a wasted opportunity to be looking at Bitcoin right now. And look, if Bitcoin consolidates, alts usually run when Bitcoin consolidates. So plan ahead. So this is my plan ahead trade. If the triggers are met, I will enter it. If the triggers aren't met, I scratch the trade and I move on and look for something else, and I literally just go back to CoinMarketCap and repeat the process. But this could be a 9 to 1. Now, if it turns out to be huge, if we have a big altcoin rally after Bitcoin has cooled off and it does go to our second target, this is a 19.6 to 1 risk to reward. Now, that is what we call a Linda at TTC. A Linda trade is a trade that just makes you so much money off one trade that it's literally like 2 months worth of profit in one trade. And they don't come along often, but if you hunt hard enough, you can get really good opportunities like this, and these are the ones worth being patient for, as opposed to trying to get a $500 move on Bitcoin. I hope that this theory is making sense to you. If all the conditions are met and we get the trade, the first target is what we would worry about first. If we are still looking bullish at the first target, we would hold on to the trade a little bit longer, probably take some profit off the table. Can't hurt to take something off, and then let the rest ride and see if we can get to our second target. It could end up being a huge trade. Guys, literally as I was recording, my camera on my computer decided to die. So I'm on my laptop now, excuse the change of scenery. But I wanted to show you SHIB. Now, before I get into SHIB, if you are looking for somewhere to trade these coins, there are a number of exchange options in the description of this video. Depending on your region, there will be one that you can trade on. So those exchanges that are listed down below, they give you one of the highest trading fee discounts that you can get. And if you're trading a lot in a bull market, believe me, it's worth getting the trading fee discount. So there's a few exchanges for you to choose down below. Have a read of them. Each one is somewhere between 20 to 25% trading fee discount. And pretty much all of these coins are available. Whether you want to take this trade spot or leverage, it's kind of irrelevant. It's really up to you. But SHIB is in a position where it may hold. It's really kind of dicey right now. The positive about SHIB is that it's holding the 200 EMA. And the 200 EMA is at around where the initial low of the day is for today as well. So that's the positive sign. We do have a breakout, and it currently looks like it's retesting. So there could be a trade opportunity on SHIB soon. But again, you're now waiting for the retest. And if we bring in the same rule that I told you before, you can see here that there is no vectors on this area here for you to set as your condition for where you want this retracement to hold. So ideally, you're going to want it to hold the initial low of the day and probably the body of this green hammer right here, because they all kind of line up. You've got the body of the hammer, you've got the 200 EMA, and you've got the initial low of the day. So if we can get a retest anywhere above this level, that would create the second side of the W, which would then be a trigger, because it would be also the break and the retest, and that would make it a trigger for a long position. However, if it started to close back below the 200 EMA, that would invalidate this trade and I wouldn't take it. So even if it doesn't come all the way into the zone, as long as we get a higher low somewhere here that is above the 200 EMA, that should be a bullish signal that it's going to break out to the upside after that. And then on SHIB, the target again would be back to the previous high initially. So let's draw this one out as a potential trade example. Again, your stop loss would need to be below that green wick there that created the low of the previous day. And then your target would be up somewhere in the previous high. So that's about a 5-to-1 risk to reward, a little bit more than a 5-to-1 risk to reward. And then again, just using the fib extension to the 100%, if we were extra bullish and it did look like we were going to break, you could stretch that out to somewhere around the 100, which is an 11.1 risk to reward. So both two amazing trades that present a much better opportunity for you than Bitcoin right now, which is playing games and being, very stop hunt heavy. I hope that you found this video helpful. If you did, be sure to smash that like button. Consider joining us in TTC, and also don't forget to grab your trading fee discounts on the exchange links down below. See you on the next one.